This is the fourth quarter update for the Amplify ETFs, Transformational Data Sharing ETF, symbol BLOK. I'm speaking with portfolio manager Michael Venuto. Michael, before we start talking about what happened in the fourth quarter, we're recording this in January. We've had quite the drawdown in the crypto space. How should advisors and investors look at this most recent drawdown in the space?
Okay, so everybody gets excited when the price of Bitcoin or cryptos goes up a lot, or they also seem to get excited when it goes down a lot. And it's funny because if you think about it, Satoshi Nakamoto built into the original technology, the idea or the original code, the idea that the price would be an incentive for miners. So it's not surprising that everybody gets excited or fearful and all that, because it was designed to evoke an emotional response. But it was designed to evoke an emotional response in the people who are furthering the network and building the blockchain. The rest of us are just speculators. So what happened to all of us speculators? Well, in the fourth quarter, there was pressure on all risk assets, some deleveraging on all risk assets, and there was substantial amount of tax loss selling. Or right, like people who bought in August at 60, yeah, they want to get out at 44 and 43 and buy it right back. Some wait 30 days because they're worried about governments changing the rules. Some wait 30 seconds. I think that most of the pressure is coming off now, though. And I think we're bottomed out pretty good in this price movements. And we can get back to what really matters, which is what are we all going to do with this code? And how are we going to make the world better using blockchain?
That's a great transition. Michael, would you remind viewers of the investment strategy behind the BLOK ETF?
Yeah, so I know we tease each other about the name all the time. The Amplify Transformational Data Sharing ETF BLOK is designed to invest in companies that are focused on blockchain, right? Whether they're investing in it or using the transaction platforms or mining or venture capital or investment banking or custody, all these types of things. So it's been an exciting time. In the fourth quarter, we had some of our highest highs, and then we had some pretty big sell-offs. And that's going to happen with any new technology that's changing the world.
Yeah. So with that investment thesis, when you look at the fourth quarter, what type of portfolio positioning did you see change?
Yeah, so I would say in the fourth quarter, we started to move the portfolio a little bit away from the high flying miners. We've gone from what I would call a very diversified basket of miners to focusing in on the higher quality miners. Now, that's not to say that the ones we sold are bad companies or anything like that. We just reduced and went to the ones that have the most access to the traditional finance capital markets because they're in a better position to weather any kind of crypto winters. Additionally, a lot of the capital that we made by reducing some of the minor exposures was really reallocated towards a segment that we haven't really talked about before because it really hasn't existed in the public markets. And that would be applications. So most of the applications that we've bought in BLOK thus far are transactional. They're Coinbase or PayPal or Square. They're using or granting traditional finance access to decentralized finance by connecting the two. Now we're starting to see something cool, which it's bubbled up in the private markets over the last, call it 18 months. And we're starting to see it creep into the public markets. And that's applications that do something else, like mortgage origination. We started to move the portfolio towards certain regional banks that are working with Mike Cagney's company Figure. There's a blockchain video on that that Dan Weisskopf did. It was amazing. But now we're talking to the real companies. There's a number of other ones. I can't forecast what they are, but I do think we're going to see a lot more true applications of decentralized finance being used for something other than just transactions in public companies over the next couple of years here.
Yeah, Michael, it's so interesting just watching this space evolve, just producing these interviews here on the Amplify platform. The speed at which the change is happening is mind-blowing. And with that in mind, as you look here into the first quarter, what holdings do you have your eye on right now?
Yeah, I mean, I think we covered a little bit of this. High quality miners. Very important that they have access to the capital markets so that they can consolidate, so that they can, uh, really use their balance sheets appropriately. So that would be things like Mara, Hut 8, Hive. Hive is run by a guy who runs an ETF company as well, or an asset management company. So he knows the markets. He knows how to deal with the issues that are out there. And that's really, really important, right? I get that decentralized finance is coming for traditional finance, but to get there, they need traditional finance to help finance them. So that's really important to us. Also, like I said, really excited about a couple of these regional banks that we've added to. Silvergate's been a giant winner for us, but now we've brought in Customers Bank and Signature Bank, and there's a few others that we're looking at. And it's the way that they're using blockchain to actually compete as lenders against big behemoths like Wells Fargo and Bank of America. These little regionals have better technology on the blockchain to originate mortgages than the money center mega caps. So things like that I'm pretty excited about here.
Now, predicting the future is incredibly difficult, but as you look out over the course of the year, or maybe even the next couple of years, where do you see the blockchain and crypto space evolving to?
Yeah. All right. So, first let's talk price, right? So we started this segment on the volatility of late Q4, early Q1. I do think we've kind of bottomed out. I do not think that the winter has started, or I still think winter is coming, but it's not here. I don't think we hit the highs of this cycle. Obviously, most people believe the cryptocurrency or Bitcoin cycle to be associated with the halving, and you meet these peaks in between the halvings. I don't think we've seen the peak that comes before 2024 yet. To that end, though, blockchain is not just Bitcoin and it's not just Ethereum. It's the technology of distributed trust. It's a technology of getting rid of the trusted third party. It's a technology. It's a ledger. It's all these things that I'm now seeing more and more people using in real applications. No, I'm hearing less and less about this guy's security token or that guy's utility token, and more about how can I actually use blockchain to make real money. And it's a nice thing to see. I've quoted it a couple times. Bitcoin and crypto and Ethereum miners made more money last year than the entire US ETF industry using blockchain to improve traditional logistics. Not even anything special yet, not even decentralized blockchain, just boring ass centralized intranet like blockchain is like 50 billion in logistics money, which is more than 4 times the revenue of the ETF industry in the United States. So this is real, and they're not putting the genie back in the bottle. But it's also a lot more things that have to happen. We're at the, call it, internet 1998, 1999 level in terms of usage. And it seems like everybody is thinking about Chewy when it's really still the pets.com era. So it's okay. We're going to get to the Chewy where we're all ordering our milk bones and whatnot online, but pets.com didn't fail yet in this crypto world. So we got to let it run its course.
That's a great analogy. Pets.com to Chewy. To learn more about the Amplify Transformational Data Sharing ETF, symbol BLOK, please visit BLOKETF.com. That is BLOKETF.com.